Corporate fraud costs organizations over $4.7 trillion globally every year. That's more than the GDP of most countries, lost to deception, manipulation, and poor controls. So here's the question: is your organization next? Hi, welcome to the GRC Sentinel. Today, we're diving deep into corporate fraud, what it is, why it happens, and how to prevent it before it derails your organization. Whether you're an internal auditor, risk manager, compliance officer, or just curious about how fraud sneaks into organizations, this episode is packed with practical tools and insights you can use right away. Corporate fraud isn't just about someone siphoning off a few dollars. It's about long-term erosion of trust, brand damage, and legal consequences. Types of fraud include: 1. Embezzlement, unauthorized use of company funds. 2. Accounting fraud, misreporting numbers to mislead investors. 3. Insider trading, using confidential information for unfair gain. 4. Vendor collusion, kickbacks, or fake invoicing. But here's the challenge: most fraud cases aren't discovered until it's too late, often by accident or whistleblower tips. In many companies, fraud thrives in the shadows of weak governance, unchecked access to data, and, surprisingly, a culture that ignores red flags in favor of short-term results. So, what are the real root causes of corporate fraud? 1. Lack of oversight. When no one's watching, wrongdoing becomes easier. Toxic culture. If employees are afraid to speak up, unethical behavior goes unreported. 3. Overtrusting leadership. Even well-meaning leaders may fail to implement proper segregation of duties. For poor systems, when controls and alerts aren't configured correctly, transactions go unmonitored. Now let's flip the script. Here's how to fight back. 1. Implement strong internal controls. 2. Use continuous monitoring with tools like data analytics and exception reports. Train your employees on fraud red flags. Create a whistleblower program with confidentiality guarantees. Document and test controls regularly, especially around cash, payroll, and procurement. Prevention doesn't start in the boardroom. It starts with culture, values, tone at the top, and reinforcing ethical behavior from day one. Let's take a real-life example. At one global tech company, the CFO was manipulating revenue recognition to inflate earnings, and it worked until a junior auditor flagged inconsistencies in contracts. The internal audit team didn't stop at the surface. They applied root cause analysis, uncovered a pattern of deception, and escalated the issue. Not only was the fraud stopped, but the company redesigned its entire revenue reporting process, saving millions in potential fines and reputation loss. What made the difference? A trained team, strong internal controls, and a culture where auditors were empowered to speak up. Fraud doesn't hide from strong systems, it hides in silence. Here's the bottom line: corporate fraud is not a finance issue, it's a governance issue. It's about ethics, oversight, and accountability. With the right tools, policies, and tone at the top, your organization can build resilience, prevent losses, and protect your brand. So ask yourself, is your organization built to detect and stop fraud, or to overlook it? If you found this video helpful, hit that like button, subscribe, and share it with your team. Drop your thoughts in the comments. Have you ever witnessed fraud? How did your organization respond? And don't miss our next video, Internal Control Testing Explained: How to Prevent Costly Mistakes. Until next time, stay compliant, stay curious.